Pat Bustamante, what did you make of the headline figure?
Well, it was softer than the market and ourselves were expecting. And it was an important read because it was the first time since last year that we're going to get updated numbers when it comes to services inflation, which is really what the RBA is concerned about. So we got an updated read on education, for instance. And the fact that it came in a bit softer than the market we were expecting is definitely a positive result and is consistent with our view that inflation, both on the good side, but domestically, is moderating.
Yeah, so we saw that February jobs data, the unemployment rate surprisingly falling to 3.7% in the month of February. Really strong jobs creation then. But the data for inflation probably comes as a bit of a relief for economists out there and the RBA perhaps.
Absolutely. I think it was definitely a positive result. And you're right, you're spot on. The labour market did show quite a bit of strength in the February read with more than 100,000 jobs created. But as we know, there's been quite a bit of volatility when it comes to those labour force numbers. It's been bouncing around for the better part of the last quarter or so. So that volatility also affected that strong read. And when you look at over the last 6 months, for instance, and you look at things like number of hours worked, that's just gone sideways in the context of an economy where the population is growing quite strongly. That just shows that maybe the labour market is easing, and the read that we got in February was more of volatility rather than underlying kind of strength in the market. And the other point is that these inflation numbers confirm that it's not necessarily underlying strength in the jobs market, but it's that volatility that we're seeing because of shifting seasonal patterns. So I think when the RBA takes a whole number of these partials together, the labour market, inflation numbers, we'll get retail trade tomorrow. I think they're painting the consistent picture that the economy is slowing, inflation's moderating in line with what they're expecting, and that's probably what they'll be looking out for before their next meet in May.
And of course, there's still a bit of data to come ahead of the May meeting. We don't have one in April now. What will the RBA be focusing on ahead? Of course, there's the quarterly inflation number as well.
Absolutely. So at the moment, the RBA's got their forecast, which we received when they last met, and that's got inflation moderating to be within target by the end of next year. So they'll be looking at proof points to support those forecasts. So they'll be looking at things like inflation, you mentioned, wages growth. So we don't get those quarterly wages number at the moment, but we do get partials, for instance, wage outcomes in enterprise bargaining agreements. So they'll just be looking out to make sure all those partials that are coming in are consistent with what their forecasts are, and their forecasts at the moment have inflation moderating to be within target by the next 12 months or so. So that's really what they'll be focusing on, and their eye will be on domestic cost pressure. So we know that global inflation is moderating. There's a global disinflationary impulse happening, and we saw, largely in the December quarter, the undershoot in inflation was driven by that disinflationary impulse. So they'll be looking out now more at those domestic price factors. So anything that kind of confirms those forecasts will give them confidence that we're on the right track, that those forecasts are coming in as expected, and that they've done their job when it comes to getting inflation down.
And just to recap, of course, the all-important question, what is your forecast for interest rates? Will we see the next move down, and when?
So absolutely, that's been our call for some time now. So we're expecting the next rate to definitely be down. And these numbers released today are completely consistent with that expectations. At the moment, we feel that the Reserve Bank Board will be comfortable with reducing rates in the month of September. So at that point in time, we'll have updated read on the real economy that comes in early September, so the national accounts data. And we'll also get inflation data, so for the September quarter, and more importantly, unit labour costs and productivity data, which we expect will also show that's going to support a moderation in domestic price pressures. So by the time that meeting in late September rolls around, we feel that the Reserve Bank Board will be comfortable with their forecast, will be comfortable with the data that's come in, and will be in a position to cut rates by 25 basis points.